Hi everybody, it's Marcus Collins from MMA Properties with a market update. We're going to talk this evening about 2020 and 2021, get our crystal ball out and talk a lot about what's going on in today and what will happen with the rest of 2021. So it's 2020, 2021 market review, market update for the town of Lexington. So, why do we do this? Well, it's relatively easy to get information today. Data's pretty prevalent. You can look at a whole number of different websites, but it's much harder to make sense of it and use it to your advantage. And so this evening, whilst we're going to show you some information, we're also going to delve into the details around what does that actually mean, the analysis of it, if you will. So, as it says, we really do put the time to really focus on all of the information about what's happening in a real estate market. I'll show you, some graphs that maybe some of you have seen before about 2020, but also we'll kind of bring it bang up to date and show you what's happening right up until March, which was just a few days ago when I'm recording this. It is April the 7th. So this evening, I'm going to take a look at the Lexington single family home market, look at the luxury market, new construction, and something we haven't ordinarily done, first time we've done it this year, is to look at condominiums. And then we'll take our crystal ball out, look at 2021. I may also, partway through, probably at the end of the single family, I'll bring it much more up to date. We'll see exactly what's happening today. There's some information that we really do need to share about what's happening in the market today. So that's the agenda this evening. So where can I get more information? I mean, that's the key here, isn't it? So many of you may have seen or may have received, if you live in Lexington, put that in front of me, the Lexington Market Review. Lots of information within this, cram-packed with statistics and analysis about what's happened in 2020 and clearly what's happening in 2021. This was delivered. We've got lots of copies of these in the office. If you'd like a paper copy of this, just let us know. We can absolutely get that to you. It's also on our website. The PDF's there. You can page through it. You can read it. You can print it as well, actually. So lots and lots of information within this about what's going on in the Lexington market. Not just the data, the analysis as well. So with that, let's kind of delve into the single family home market. Interesting to take a kind of historic perspective here as we try to understand 2020 and now, much more importantly, of course, 2021. So many of these graphs will take us back about a decade because there's a story to tell in many cases, and it really does tell us what we anticipate to see over next year, the rest of this year, and perhaps even into the next few years. So first graph really is about trends. What's happening in the kind of 10-year, in some cases even more time frame. So this is the inventory levels. What this is a snapshot of how many homes are available to buy on the first of the month. So first of every month I go out and say, so how many homes are there to buy? I don't worry about condominiums or single family. This is just what's in aggregate available to buy. So what's interesting about this is the trend, and I'm not sure you can see my cursor. I need to figure out how to get that more clearer. But as you can see in that kind of 2010, 2011, 2012, very high inventory levels. This was, if you remember back a little bit further, the end coming out of the big recession that we saw in 7, 8, and some respects into 2009. So it continued on till about 2012. And then what you see is a dramatic reduction in inventory levels. If you look at a town close by here, just in Arlington, for example, you will see a much more gradual shift from 2011 to 13. The first-time home buyers coming back into the market, they don't have anything to sell. They came back in and they pulled down the inventory levels in Arlington. They bought the homes that were available to buy. Here in Lexington, not really a first-time home buyers market. Many of the buyers moving into Lexington have to sell their existing home. And so we saw about a 12-month delay in that as buyers felt the confidence, the sellers in this case, felt the confidence to come back into the market, but were somewhat constrained because they weren't sure if they could sell their existing home. But as you can see there with this graph, a big reduction into that 2013. in inventory levels. And those levels continued. They dropped a little bit at 17 and 18. I'll have a little bit more to say about that in a moment. Came up in 19, and 2020 was kind of a strange year, you would expect, but not quite as strange as perhaps you would have imagined. But that long-term trend, or that trend, I should say, of a dramatic reduction in that 2012-2013 timeframe, and then low inventory levels all the way through, in fact, to this year as well, really characterized buyer demand not as strong. Since 2013, very strong buyer demand. So that's kind of the story of the inventory levels. And that really, we're going to focus a lot on buyer demand, specifically when we talk about 2021, you'll see that. So that's the inventory levels. Home sales are interesting. You know, I mentioned here that we have a reduction in the amount of inventory, increased buyer demand or a lack of inventory. And the next graph kind of shows that quite well. This is the number of home sales in Lexington over the last decade. So ignore 2020 for a second, but as you can see, the high point was in 2015, and then it reduced until we got to 2019, kind of stabilized 2018, 2019. That's a reduction in the number of listings. So there just weren't enough homes coming on the market to satisfy the buyer demand. Cause rising prices, of course, but let's focus on supply and demand for just this moment. So as you can see, that reduction, and there's two things at play here why we saw that. The first one is, if you think about the market today, and I'll have more to say about this in a moment, it's very much a tough market to buy in. Now we think about first-time home buyers and them struggling to buy into this market, but the same is true of downsizers. So if you're living in a 4,000 square foot home, for example, here in Lexington, you're looking to downsize. I'll pick Arlington as an example, to the next closest town in. It's tough to buy in Arlington, and so it becomes difficult to sell. And so many sellers found themselves wanting to sell, but not able to because they couldn't buy that next home. That's the first reason. The second reason is price appreciation. There is this perception, some of it reality, perhaps not as to the extent that many Lexington residents believe, but there is solid price appreciation in the town, somewhere between 3 and 5%. Remember that number. We'll talk more about that in a moment. But that 3 to 5% price appreciation we're seeing. That means that many sellers thought, you know what, I'm going to stay where I am. It's tough to buy, but I'm going to stay where I am. Sure, I have to pay the taxes in the town, but you know what? I'm getting price appreciation on my most expensive asset, so why don't I just stay there? Suffer with the higher taxes that I have to pay because my house is more expensive, but it's worth my while. And so as we got to 15, 16, 17, and then into 18 and 19, we did see a reduction in the number of listings coming on the market because sellers either couldn't move or felt they didn't need to, an age in place, if you will. Now, 2020. Clearly a dramatic increase in the number of sales, about 25% more sales in 2020 than in 2019. I have to say, back in a year ago, actually, if you think about COVID, right now, a year ago, we were in lockdown. We were in our homes. I had moved my office down to the dining room, and that's where I was for the next month. So we were right in the middle of lockdown, right in the middle of COVID. We didn't really know what was going to happen, but there was an anticipation that it was going to be a very slow year for real estate. Turns out entirely the opposite was the case. As you can see, an awful lot of sellers put their home on the market, and there were a lot of buyers coming into the market too. And so consequently with high demand and high supply, that's why you saw the large number of homes that sold in 2020. Some of it, I anticipate, caused by this reduction. Sellers thinking now, you know what, now's probably a good time. Who knows what the future brings? We don't really know where COVID's going to go. We don't really know what the economy is going to do. Now is a good time to sell. Perhaps I'm moving out of state, moving to New Hampshire, to Maine, Western Massachusetts. We had a number of clients who were moving out west. So they came on the market thinking now might be the right time. Arguably it was. And so that high demand and high supply kind of moved that forward. So that was the story of 2020. Lots of home sales, far more than we anticipated 12 months ago. In fact, exactly 12 months ago while we were in lockdown. Days on the market. It's pretty low as it is at around 40. This didn't change really. When you think about Lexington, there is a large number of expensive homes. In general, they take longer to sell. And so it's not surprising that the number's around 40. It's static between 2019 and 2020. So not really surprising that that number's around 40. The lowest it can get, if you look at an Arlington market, for example, is around about 20, the average. So it's not as strong as, for example, an Arlington market, but we have much more expensive homes, which in general take longer to sell. So if we look at this data for a much more granular in terms of the price points, and you'll see it's much lower, clearly for those lower price points too. So days on the market, as we would expect, on aggregate, around 40, unlikely to get much lower than that, whatever the demand, just because of the house prices. The same is true of the sell price to list price ratio. This is a ratio of the sell price to the list price. So imagine a home comes on the market for 700,000, sells for 700,000. That's 100% sell price to list price ratio. As you can see here, once we pulled up and out of that downturn, the economic downturn of 27, 8, 9, 10, as it were, we got to about 100%. Dipped a little bit lower, 99. It kind of varied, 99.5, 99.8. It was kind of around that number. Dipped a little bit higher in 2020, just over 100, 102 from recollection. But around about 100%. That's as good as it gets in Lexington, just because of the wide range of house prices. High priced homes in general do not sell for over asking, for example. It's not always the case, but in general they don't. So 100 is a good number for Lexington. By comparison, Arlington upwards of about 104, 105, because they've got that lower price point. So that's where we are with sell price to list price. Not dipping at all, but sticking around about 100%. So that was great. So, okay, Marcus, tell me about prices. So prices rose a lot in 2020. As you can see, this is the average. It went from 1.34 to 1.58. Here's the median. It again rose from 1.2 to 1.35. So a large increase. But some caveats to this. When you think about the distribution of homes in Lexington, there are some at 700,000, very few, a lot between 1 and 1.5 million, and a larger number at 2, 2.5, and then it drops again to a relatively small number once you get over 3. What we saw in 2020 was a shift in that distribution to a higher price point. More homes sold between 2 and 2.5 than we saw in the years previously. And so what happened with the average and the median is it got skewed. And so that isn't a real price appreciation. I want to kind of put that in perspective. The numbers that you see here in terms of the appreciation, they are not real. It is much lower than what you saw here. Somewhere between 3 and 5% if you look at some other ways to calculate it. I'll talk a little bit more about that in a moment. But that large increase you see there, just too big really. It's not real. It's a facet of a changing distribution. And that's where we saw those large increases. Now, that's not to say it wasn't positive price appreciation. As I mentioned before, somewhere between 3 and 5%, depending on your price point, but certainly not the appreciation you saw here. And I'll show that in a moment. So what was the impact on the housing market of COVID, or COVID on the housing market? What we started plotting last year, and I've got some interesting data for this year, bringing this kind of bang up to date in a moment, is we started plotting the cumulative sales. That is, how many homes went under agreement week by week. Here's the data for 2019 versus 2020. Blue is 2020, this kind of orange color, pink orange color is 2019. As you can see, in 2019, there's a relatively steady rise. We come out of winter in mid-February, give or take, and then up we come until you get to a bit of quite slow down in that June, July, August timeframe as summer kicks in. Slight upgrade and then, slight uptick, I should say, in the fall market, and then slows off in the winter. COVID kicked in. It was quite interesting. So COVID, if you remember back 12 months, as I said before, second half of March, really, that was the last time we brought homes on the market for about 6 weeks. So second half of March, there was almost nothing. Nothing in April. You can see that there with this flattening of that curve in terms of the number of homes that went under agreement. And then the big question we had at that time is, when will it pick up? And it turns out that it picked up in that second half of May, perhaps week 2, 3, 4, it began to pick up, and you can see that there. Buyers came back into the market, and therefore sellers felt confident about bringing their home on the market too. And a steady rise in that the number of homes from about that first or the second week in May. But it continued. It continued unabated all the way through till the end of the year. As you can see, the number of homes that went under agreement, this is not the number that sold, went under agreement, because I want to eliminate that 6-week delay from the under agreement and closing date. 372 went under agreement in 2020 versus 304. And you can see that play out very clearly as up it comes there, as you can see it there. In terms of the detail, what was going on at different price points, what I've shown here is the number of property sales at these different price points, up to 750 to $1 million, $1 million to 1.5, and so on. You can see that sale price to list price ratio over 100% for those lower price points, and then it dipped down as you get to the higher price points, 1.5 to 2.5 and so on. It kind of dropped off, and that's why it's very strange to see a number more than 101% on aggregate within the town. Arlington has a much narrower distribution, and that's why you see a much higher number overall. In terms of price appreciation, one way we calculate it, there are a number we use, this kind of a good heuristic, is the rate of change of living area in each of those price points. You would expect the average living area in a price point to decrease as prices increase, and so we use the rate of change of the living area size to give us that indication of where we would be in terms of real price appreciation, as opposed to price appreciation, which is kind of skewed, if you will, by the distribution. So that was 2020. What I thought I would do now is show you what's happening this year, kind of bring it up to date, because we've got 3 months worth of data to look at, and I thought it would be useful to kind of do that right now. So go to our website, Real Estate Statistics. If you haven't looked at our website, there's lots of different stats you can look at. There's the inventory levels I showed you just a moment ago, sales price distribution, home sales, and so on. But what I want to focus on is I'll look at median price. Average and median will both show us that same effect. But if I go, as you can see, we have an awful lot of towns to look at. But what I will show you is what's happening with prices as we are here in 2021. The reason I wanted to show this is I've seen some headline numbers, if you will, that we've seen a 16% rise in house prices in the first 3 months of this year. Whilst on the face of it that's accurate, we need to remember what we're looking at. I just checked the numbers. We've seen about 50 sales in 2021 versus closer to 400 in 2020. So we've only really seen about 12 or so % of the sales come in. And so it's highly likely, in fact it's reality, that there's an awful lot of skew distribution in these 3 months worth of data. You can see it more clearly if I show you the Belmont data, which has far fewer home sales. There. You can see a wide difference between January, February, and March. And so when you read those headline numbers in terms of what's happening with prices, go back to Lexington for a moment. When you read those headline numbers of a 16% rise in prices, it's not real. It's a facet of where we are in the market. There really has not been enough sales to say with any degree of accuracy what price appreciation we are seeing today, because there are an awful lot of homes that have sold but have not closed, and therefore their sales data is not publicly available. So when you see those numbers, treat them very much with a pinch of salt, if you will. Look at them very nuanced. There's a lot going on under the covers, and in reality, I wouldn't pay any attention to that headline number. It's too early to say what kind of price appreciation we have seen this year so far. What is clear, though, is that the first 3 months, 4 months, perhaps here we are in April, excluding January to some extent because it's a little bit weather dependent, it is a great time to bring your home on the market because there are very few homes coming on the market, but there are an awful lot of buyers out. As soon as the weather changes, the buyers come back out looking in the market, but there are not that many homes for sale. Sellers tend to delay until late April and May, when the trees are up, when the garden looks better. They tend to delay that long. Reality is the right time, if you have that option to bring your home on the market, is early in the year. That's really there is some benefit that we're seeing here, just not enough to be able to say whether that's going to continue throughout the year. Because even if this was a real number, it's very likely that that average will begin to drop off as we get more data and as price appreciation begins to kind of slow down somewhat as more homes come on the market. So I thought that was useful. I've seen that number being pushed around and I wanted to kind of put it in perspective. What is interesting to look at, and we're kind of just building this information to put it on the website, it's not quite live yet, is to look at that cumulative graph that I showed you and compare 2021 versus 2020. What I showed you previously was 2020 and 2019. What I thought I would do now is show you what we're doing, just kind of bringing this data bang up to date. Let me get a single family. Let's compare 2021 with 2020 and see what we see. So in this example, sorry, I went too far. Blue is 2020 and the pink color is 2021. What we have definitely seen is more sales in 2021 than there were in 2020. And you can see that clearly in the data that you're looking at here. This was done at the end of March. So this is the first 3 months of the year. There definitely is more sales occurring. We're hearing talk that there is low inventory, the implication being there is not very many homes for sale, that there are not many homes being listed. That is not true. What is true is that the homes that are being listed are selling quickly. So yes, overall inventory levels are low, but that's because we do have supply in the market, but that supply is being sold very quickly. What's dominating the market right now, today, is high buyer demand. We have examples of homes selling far over and above the list price, just because competition is kicking in and buyers are coming into the market. So this we're going to see, if you think about the rest of 2021, we are seeing a lot of buyers, and that will continue. The same is true, and if you might say, well, what does it look like in terms of 2021 versus 2019? Let me show you that data as well. We are still above what you might conclude was a kind of average year in 2019. We are seeing more sales, and if we're seeing more sales, homes that perhaps carried over from 2020, there weren't very many of them, by the way, but homes that are coming on the market right now are selling quickly, and therefore the overall aggregate inventory level is low. But that's not to say that the number of listings is reduced. It's not. It's just that there's high buyer demand. This is the data for Lexington. It's true of other towns too. So that's kind of the characteristics of the market today, dominated very much by high buyer demand. And we expect that to continue as we move forward through the rest of 2021. Clearly, an awful lot of buyers have already bought. That's another reason why it's good to bring your home on the market early. By the time you get to May, a large number of homes will have sold. As I mentioned before, we've seen over 50 home sales already in the first, realistically, six to 8 weeks of this month in February and March. That will continue, and so the longer you delay bringing your home on the market, the less buyers there are in the market. Albeit there's a lot of them in 2021. I was just talking to somebody today, commenting about rental returns, specifically within Boston, and the kind of anecdotal number there is that we're seeing about a 20% reduction in rental returns or in rents in the condominiums in Boston. Much of that, I'm sure, due to people moving out of the city, out here into the suburbs, if you will, perhaps even further, back to, COVID, the long-term implications of COVID is we will see many employers thinking you don't need to come into the office 5 days a week. And many, now that children are back at school, many employees thinking, maybe I'll go in 1, 2, 3 days a week. And so commute becomes less important. And therefore, I'm fine living that little bit further out because I'm only commuting in 3 days a week. So that's a lot of what's driving this market to here as well. Somebody else mentioned that they thought it was perhaps a lot of people relocating into Boston. It's interesting, there's some data I saw the other day that said about 80% of the buyers in Boston actually live in Boston. So we are not seeing a huge influx of buyers from outside the Massachusetts area or outside the greater Boston area. A lot of it is buyers who are already living in the area looking to move into their first or subsequent home. So though that was quite interesting information to see, it's not really people relocating in. There clearly are some, but that really isn't the dominant factor in the market today. So I wanted to kind of give you the single family market, kind of bring it up to date. I do these on a monthly basis, and as we kind of move forward, as we get more information, so it will become clearer. Although I think we do have a pretty clear picture right now that we are seeing sellers coming on the market. No surprise, we are seeing more buyers in the market than we have historically seen in the past. So there we go. So back to the slide deck, and let me have a look now at the luxury market. Excuse me 1 second while I do that. So luxury market. Where are we? So 2020 data was a bumper year for luxury. I should tell you, we define luxury as home sales over $2 million. It's an arbitrary number, but it seemed like a good number for a luxury home. So this is the number of home sales over 2 million over the last decade. Blue is existing homes and green is new construction. As you can see, slight increase in new construction, but a solid increase in terms of the number of home sales. Now, back to what I said about price appreciation, about how it was skewed, both in average and median. You can see that playing out here. That large increase in over $2 million sales has skewed that mean and the average, and that's why the price appreciation you saw, of around 12%, I think it was, when it came to the average, isn't real. It's lower than that, and that's the other reason, of course, why the 16% number being bandied around is simply not real too. So solid year for luxury home sales. Average days on the market, I mentioned before that on average we're at about 40. That's at a relatively low number comparison to other towns because we have a large number of luxury homes or over $2 million homes. And you can see the ratio, the days on the market, for luxury around about 67. And you can see that's kind of bringing down the overall aggregate number for the town, much higher for the lower price points, of course. The same is true, of course, sale price to list price ratio. Again, why aggregate of just over 100 in Lexington, whereas the aggregate for over 2 million is sitting there at about 97, kind of dragging that one down. Here's that distribution at play. This is the sell distribution over the last 4 years, 2017 through 2020, and you can see a change in the distribution. The big change actually in that $2.5 to $3 million. We went from 4 homes selling in 2019 to 20 homes selling in 2020. That's a big difference. And so that's where that kind of change in distribution comes in, and that's why that was skewed. So you can see that kind of play out there in the distribution. New construction, kind of ups and downs. We did see a high point in 2015, dipping down to 2018, where it was only 339 new construction homes. What's at play here? Some people might argue the change in the regulations around floor area ratio. I think that didn't have that big an effect. I just don't think that was as big an effect as perhaps was anticipated. What's at play here is competition. Given that the number of home sales on aggregate reduced during that time, that raised the buyer the buyer competition, if you will, and so the builders found themselves having to compete with home buyers, and there just wasn't the return. As once now we begin to shift to a higher price point, you just saw a moment ago that many more sales in $2.5 to $3 million, that gives more the developers more leeway to offer more money. And so now you're seeing the number of new construction rise again, because they're now being forced to and being able to compete with the buyers in some cases. Not all cases, clearly, but in some cases, and that's kind of what you're seeing play out there with that increase through 19 and 20. It's the buyers, the developers having to pay more money in terms of how much they pay for homes, both in terms of how much, take a step back perhaps, the way a developer looks at pricing new construction or pricing a tear down and new construction is that they think of in terms of the price of the new construction home. So if the new construction home is on sale, make the numbers easy, 2.1 million. On average, they will look to spend about 700,000 on the acquisition, the tear down, 700,000 for the build, and then 700,000 in profit, the rule of thirds, if you will. What we've seen in recent years is that ratio has shifted from 33 upwards to 39, in some cases to 40% for the acquisition. So we've seen both the average price point of new construction rise. We've also seen the developers being forced to pay more money for those tear downs in terms of a percentage of the final sell price. So there's two things at play, and that's why you're seeing the number of new construction homes rising, is that the developers are buying more tear downs because and they're forcing themselves, being forced to compete with the home buyers. In terms of distribution, this is the same graph as we saw for luxury. You can see that shift in distribution to the higher price points as we move from 2017, 18, or between 19 and 20. You can definitely see we saw more in that 1.5 to 2, about the same number in the 2 to 2.5, and then we went from 4 to 11 in the 2.5 to $3 million price tag. So there's that shift to higher price points, this as I mentioned a moment ago. Turning our attention now to condominiums. We don't normally do condominiums, but I looked at some data in December, January this year and thought it was useful to kind of bring this in because there's some interesting information to show with condos. First of all, home sales. Somewhat cyclic, as you can see here, but I broke it down in terms of new construction versus existing condos. And by existing condos, I mean Pfeiffer Lane, Drummer Boy, Potter Pond, and so on. The developments that have been around for, in some cases, quite a while. And then the new ones in terms of the development up near Estabrook and so on. So I kind of broke it down in terms of new construction versus existing condominiums. Somewhat cyclic, and that cyclic nature really is a consequence of when a new condominium subdivision comes online. You can see one in 2020, that was the one up by Estabrook, and so on. That's kind of what's giving the kind of undulations. The average price, unsurprisingly, is rising. There's a large number of new construction condominiums being built. Those prices are well over $1 million in many cases. And so guess what? Average prices have risen on aggregate. But, and here's the interesting thing, and this is why I included condominium data in this, in the market review and also in what we're talking about this evening. What's the average sale price for existing condominiums? Well, it turns out that whilst it rose up until 2018, we've seen a decline 2019 and 2020. What's at play? Clearly the question we have to ask here, why are we seeing reducing prices in condominium sales when on single family homes have risen year on year and continue to rise? What's happening here is condominium HOA fees. I'm going to compare Arlington and Lexington because on average, the price of an existing condominium versus the price of an existing condominium in Arlington is about the same. $680 here in Lexington, $660 in Arlington. So a buyer of a condominium has a choice. Do I go to Arlington? Do I go to Lexington? It's about the same price. What's interesting though is that the average HOA fee here in Lexington was $500 a month. The average HOA fee in Arlington was half that at $250. So there's a big difference in that HOA fee. Some of that is a consequence of, if you think about Drummer and Pfeiffer Lane, they have tennis courts and swimming pools and that. Whereas most of the condominiums in Arlington are in double-deckers, multifamilies that have been condoized, or triple-deckers. So they don't have that infrastructure that has to be paid for. But when a home buyer is looking at a condominium, maybe they're pushing to get, to be able to afford that $600,000 price point. They're looking at it going, do I go to Arlington where I'm only going to pay $250 condo fee, or do I go to Lexington where I've got to pay another $250, $500 condominium fee? And that's what's playing out here. It is that reluctance of many buyers to pay that high HOA fee in comparison to what they pay, for example, in an Arlington, where they don't have that infrastructure, but is that actually being used to the extent that the HOA fee commands? So I thought that was useful information to see those declining condominium prices. That's the rationale for why we're seeing that. So let's take a wider perspective in terms of what's happening in the market, and that will then lead us on to what we anticipate in the rest of 2021. So it's interesting to look at the demographic data. This is the demographic population pyramid, as they call it, which is the number of people who are in the different age brackets. So the first bump in that, if I kind of go on, you can see is the downsizers, the baby boomers. That's the children who were born just after World War II, have now got to the point of retirement and potentially downsizing. The lower bracket, the bump in the numbers, if you will, is a consequence of the first-time home buyers, the so-called millennials. Now, this is aggregate data for United States, on aggregate. I think this would be different. I don't have the information. I can't get the information from Massachusetts, but I have an inkling that we will see a larger bump in those lower age brackets, just because Massachusetts has a very vibrant economy, and specifically in terms of tech, biotech, and so on. We're not a large manufacturing base. We are very much a technology and biotech based, which tends to bring more younger people in, fresh out of college, and so on. Exactly why they're here, because the universities are here. So if we had this information from Massachusetts, I think what we would see is a larger group of people in those lower price points, just because of the economy here in the state. But if you think about the homes that these two groups are looking for, downsizers are looking for, if you live in Lexington today, perhaps you don't want to move very far, you want to stay close to your circle of friends, you therefore look at an Arlington, for example. First-time home buyers renting in Cambridge or Somerville, thinking, I want to jump into my first home, my first condominium perhaps. Where should I go? Great place to look would be, for example, Arlington. Vibrant town, easy to commute, and so on. So all of a sudden you see a town like, for example, Arlington, and I do something similar for Arlington as well. You will see a very, very high, for example, sale price to list price ratio, lots of competition. But that's also why, back to the sale price, the sales data I showed you, why we've seen those declining sales, number of sales in that 15, 16, 17, 18 time frame, because they struggle to buy their next home. So what's driving the market today are both first-time home buyers and downsizers. We need both of those. We need downsizers to go, to their next home, so everybody can kind of move up the housing ladder, if you will. So that's really the key driver in the market today. It's really about demographics and the changing demographics of the United States. Many people ask about interest rates. Are interest rates rising? I thought it was interesting to put this data out there because I thought interest rates have been low for a while. But actually, if you compare today and the predictions here for 2021 versus even back to 2018, where they were relatively low at 4.5%, they're very, very low. Now, these may change slowly as we move forward, but even when we were looking at this data back in 2012, 2013, and 2014, when we were first starting to look closely at interest rates, the analysts tell us that it's only when interest rates get up to that 5.5%, 6% that it begins to have a negative impact on buyer sentiment. We're clearly a long way from that. And so even if interest rates begin to rise over the next few months or years probably, inevitably it will rise, but it really will not have a sizable impact on buyers' ability to pay until it gets to those large numbers. And that seems like, if we ever get there, a very long way away. So I don't foresee interest rates, even a rise in interest rates, having any kind of substantive effect on the housing market. So that's interest rates. So what about 2021? So we have a little bit of information, and I showed you that just a moment ago. In terms of what we expect to see, I anticipate we will see roughly the same number of home sales as we saw in 19. I don't know we'll see the same number we saw in 2020. That almost seems like a bit of an anomaly. But we will be back to where we were in 19, perhaps a little bit more, as there are more sellers looking to sell. Now is a great time. So we may well see an increase over 19, but probably not the 25% increase we saw in 2020 play out again in 2021. That rate of increase does seem unsustainable to me anyway. So, but there will be a large number of sellers in the market because they're consistent with 19. We are seeing a large number of buyers in the market. Consistent, I think, with what we're hearing and what we saw last year in terms of the change in terms of, do I need to live in the inner city? Would I prefer a somewhat larger home? I'm going to be working from home 2-3 days a week. I need a slightly larger home. I need 2 offices and so on. So that move of buyers out of closer into Boston, into larger homes, perhaps out of rentals into buying too, that's playing out, and it's playing out today. We are seeing a large number of buyers in the market today, more than we saw in 2020, and it is kind of playing out because of the longer term effects of COVID moving forward. So lots of buyers in the market. So in terms of the predictions, lots of supply, lots of demand, perhaps more demand than there is supply. That's certainly where we are today. That will probably continue. So positive price appreciation. I really don't see it getting much above that 3 to 5% on aggregate. We may see more at some of those lower price points, specifically now, but as the supply grows throughout the year, so that price appreciation we've seen in the first 1 or 2 months of this year, 3 months of this year, will begin to kind of dampen down as it inevitably does. So lots of supply, more demand than we anticipated, and therefore positive price appreciation, very similar to what we saw in 2019 and 2020. So that's where I think we'll be in terms of 2021, and it will play out very much as we saw in 2019. That seems to be where we are today in terms of the overall kind of trend of those curves. So that's my predictions for 2021. I want to thank you for listening. I mean, why do we do this? We really do think that you, the client, deserves to be the smartest person at the closing table. That's what it's all about. And everybody, and why we live stream what we do here today, everybody really benefits from being smarter about home buying and selling. And that's kind of the crux of this overview of the Lexington market. So with that, I'm going to say thank you. Lots more information on our website. If you have any questions, please reach out to us. We have lots and lots of information, and as you could probably guess, we love to talk about it. So with that, I'll say goodbye until next month. Bye.